This is how I'm trading using a daily zone. So guys, before we start, smash the likes button, turn on notification bell, so whenever I drop a new video, you'll be the first among few others to get it and learn something from. So let's get straight to the chart. Right, I'm on gold chart daily. So what we can see on this very chart, we saw that this market has been bullish for a very long time. You can see the market was bullish. From here it was bullish, meaning the market was going up. You can see it's following the trend line upward. So this shows that the market is going up. Under this trend line, there are other zones, there are other supply and demand zones under this zone. That is what you are going to mark. You are going to mark out, because this will indicate your structure. This is how you are going to read your structure. So now I'm going to pick my trend line tool. You can see this was a low that broken structure to the upside. So here was the high and here was the lower high. So the market pushed to the upside and it comes back to retest this zone for it to push the market upward. But what happened? The market failed to push the market upward from this zone, and we end up having a BOS right here, which has broken structure to the downside. So it has taken all the stop losses away from here for the market maker to push the market up to the upside. So from here, since here was the last bearish candle before this happened, we marked this candle out, this very one, this bearish candle here, we mark it out because that was our last down candle before the break of structure occur. So here is our break of structure. Here is the BOS. So that was where the break of structure to the upside occur. Then we marked our candle out. The last bearish candle before the market pushes up was this one. So we scale it out. After scaling this market out, we wait. We scale this same candle. We scale this same candle to our H1. We scale it down to our H1. So that's what we are going to do now. Let's use our zone, our rectangle. Let's use our rectangular tool to mark out the zone, so we won't be confused when we once we get to our H1. So we scale it out. So now let's head to our H1 and look for. Okay, right here I'm on my H1. Here I'm on my H1. Here is the zone I marked on my daily chart. So let's look for our last down candle before the up move. You can see here is the candle which I've already scaled it out. Here is the candle, this very red candle. You can see this candle. Here is the wick and here was the lower low. So we marked from the wick because the market can return from any place. You can see that this very zone 3, it has about 3 bearish candles to the downside before it took a lot of candles before the market can easily break out from this zone. This shows you that this zone was a very strong zone. So once the market comes into this zone, no matter how we may have something, at least something to work on. So as the market comes into that zone, we are looking for two stuff. It's either a shift in market structure or an engulfing pattern for us to enter this trade. So as the market come into the zone, it has given us an engulfing pattern from our H1. But if we go to our M15, we will be able to find a shift in market structure for us to really take a trade. That is the one I love using, a shift in market structure, which is something like this. The market will come into the zone and gives you something like this on your M15. Meaning the market will come in and gives you a break of structure. So here, right here will become your point of interest for you to take a trade. So when this happens, this very one, the reason why I like this very entry pattern is because it can really gives you huge profit. You risk small to make more. But in terms of this, maybe you can just go 1 to 10 with the engulfing pattern right here. You can see as the market come into zone, it printed out this very engulfing pattern right here. This very one. There's an engulfing pattern right here. The bearish candle and the green candle together, that is an engulfing pattern. So as the market comes into the zone, it gives you the engulfing pattern. So you place your trade right, not at the close of the engulfing candle. You place your trade right there. That is where you place your trade, at the bearish candle. In UTP 1 to 10, anyhow you can have 1 to 10, because this is a daily zone. You can have 1 to 10 or 1 to 7 from this zone. So let's check how many how the market was able to run. That was 1 to 6. That was 1 to 6. And that was 1 to 9. You can go for 1 to 10, or if you don't want to be greedy, you can stop at maybe around 1 to, and you take your profit and move. It's better you have your profit than to lose a trade. So this is how I was able to use a daily zone to map out my trading. I had to scale it down to H1, from H1 to like M15 before we possibly take our trade. Using a higher time frame is always a plus. So guys, don't forget to subscribe to the channel, turn on notification bell. I remain Akwa FX as I sign out.